All right, good morning, everybody. I'm glad you could all join us today. Today we have a special guest joining us, and I'll be introducing him in just a few moments. On Thursdays, as everybody knows, our work from home series, we focus on something that is very business centric, primarily geared towards the business owner and the decision makers as they look at their business in what we call business unusual environment. And today we have somebody speaking cyber insurance as it relates to your exposures in the remote workforce. Your people are working from home. How are your exposures different as you extend that workforce beyond the four corners of your office into people's homes where they're now working and they're in your employ, working from their house on your goods or services or whatever it is you're delivering to your end users, customers, or clients? Where are your liabilities in that? How do they differ from what is out there when they're working in your office, where you have more control over their surroundings? A few housekeeping items. If you have any questions whatsoever, at the bottom of your Zoom window, there is a Q&A and a chat. Preferably the Q&A. If you would put any questions that you have in there, that would be terrific. If they're of importance or they're contemporaneous to whatever Peter's speaking about, I will gladly interrupt him. Anybody who knows me knows I have no problem with that. Otherwise, we'll hold them off to the end. You can ask any questions you like. Also, in an earlier email that we had sent out, we made note that if you have any questions specific about your insurance or your insurance policy, or what's something called a declarations page, which tells you what your coverage is, and more importantly, what your exclusions are, those things that if those events happened, they're not covered. This is the place to bring them and ask them, because Peter's here to answer any questions that you have on your insurance policy as well. The good thing is he's not here to sell, and so he's not here to sell you insurance. He's going to give you the straight skinny on everything and anything that you have relative about your insurance policy, etc. All right, with that, let me video and stop the share. And Peter, you out there? I don't see your video.
I'm trying to enable the video here.
You can do this. We have some tech people on this call. I'm sure we can send them over to help with that. Let me see if I can help on my side.
I was going to say, is it on your end there? It looks like the host is not letting me do it.
No, I don't. Robert, any assistance out there? Okay. I'm not worried about it. That notwithstanding, if we get video, great. If we don't get video, I'm looking over here because that's where the camera is. That's where my screens are. I'll look over here now. Great. Okay, so why don't we spend a few moments, if you would, introduce yourself, who you are, company you work for, what you're going to be talking about, etc., and then we'll go from there. We're all looking at your chat session. That's awesome. You're using a Mac, we're PC people over here. So why don't you just introduce yourself and then you can jump in. How's that?
Thanks so much. Yeah, so hi, I'm Peter Hedberg. I'm an underwriter with an insurance company called Corvus. We were founded a couple of years ago. We're actually in the insurtech space. So in addition to offering insurance products, we have software that we build that assists us in underwriting different companies, whether they be tech companies or non-tech companies. That scan that we've sort of built has allowed us to underwrite and basically price insurance more accurately based on your security posture and digital hygiene. So that's what we do. We vend our product through independent agents and brokers, and we've got a couple on the line here as well. So with that said, I think I'm just going to jump in. And again, questions along the way. Yeah, please just let the host know. So today we're going to talk about the insurance, and then we'll also talk about the components of a policy, but then working from home exposures and stuff that we've been worried about in the insurance world lately with this whole, migration to home. So just a couple of things. Security is already falling by the wayside. Unfortunately, a lot of this has to do with the fact that priorities right now within the C-suite are not aimed towards cybersecurity. They're aimed toward trying to keep a business alive. The unfortunate blind spot there is a ransomware attack will put you out of business faster than the virus did or any sort of quarantine would. And it will prevent you from making any money at all. Even though for a lot of businesses, they're just making diminished amount of money. Having a ransomware attack can bring everything to a halt. So I just threw in a quick line that I've been picking up in the insurance wires. And it's basically the C-suite basically saying, look, we're trying to stay alive. Cybersecurity is not, and this is a huge opportunity for cyber criminals. The Department of Homeland Security.
Yeah, actually, interestingly enough, I'll just interject for a second. We spoke about this the other day on Tuesday's call, that the C-suite, the executives of the company fully understand that their companies are exposed to. And while typically they'll focus on cyber, right now, like you said, they're really focusing on survival of their business and how to function in this business unusual environment. And cyber criminals are preying on them literally second by second, because they know that there is a diminished security posture as they are hyper-focused on business unusual. Sorry,
yeah,
Peter.
and it's funny too, because there is honor among thieves. There are a group of people right now who are there are a group of bad guys that basically are engaged in ransomware as a business. And they're actually involved in fighting other people that are engaged in the same business to try to prevent them from attacking healthcare facilities. So like there's the bad guys, and then there's the even worse guys. And the even worse guys are attacking hospitals because they know that they're that much more vulnerable right now. So yeah, lots of interesting stuff happening in the dark world of crime. So yeah, the Department of Homeland Security put out guidance on COVID-19 and the different exposures that are happening there too. So the government is trying to put out as many alarm bells as they can as well. Just a quick agenda. We'll talk about, like I said, the insurance. We'll talk about the new normal, the working from home arrangements, how our insurance responds to that. And then we'll actually wrap up with some cyber hygiene tips, stuff that I've been telling our clients to try to put them into a better security posture. So right now, cyber insurance is the newest insurance product to the block. And when I say newest, I mean it's probably the newest conventional product. There are still a ton of businesses. So this number is from 2018. The 2019 number came out recently, like in the last couple of days. Marsh said that still only 42% of businesses are buying this type of insurance. So when you think about buying insurance, you're pretty used to buying auto and maybe your business owner's policy and workers' compensation, health insurance, and that sort of stuff. This is a component of this is a component of your insurance program that a lot of people haven't considered yet still. So,
and just before you move on from that slide for a second, the cyber, just to clarify for the audience, cyber insurance covers all of those, or would cover, depending on the policies that are written, all of those expenses relating to, God forbid, there was a successful attack. Whereas the other parts of your insurance portfolio may not cover that. Is that accurate?
Yeah, correct. And we'll kind of get into the nitty gritty a little bit of the difference between those two. It's important to note that right now there's a battle going on in the insurance marketplace over whether or not COVID is actually covered under property policies. And the big argument that's happening in the courtroom right now is, for some property policies, there's what's called a civil authority trigger, which means if the government tells you to shut down, that might trigger coverage under the property policy. So that's all evolving right now too. It's just important to note that we're actually not going to cover the virus directly here. This product is designed to cover your cyber exposures during this time, and honestly during any other time as well too. It's an annual policy. So let's get into some of the boring stuff. I will make it as interesting as possible. I've been working with this product for over 10 years. So any questions along the way, please let me know. So the product is broken up into third-party components and first-party components. The third-party components do just that. They protect you against a third party. And that's when somebody is hired a lawyer and they're suing you and they're alleging negligence for many different reasons. The biggest one is network security and privacy liability. So if somebody intruded on your network and you're holding data of a third party that you're legally responsible for, that's what that insuring agreement is going to do. It's going to pay for a lawyer to defend yourself, and it's also going to pay for a breach remediation and forensics to step in. Similar to that, regulatory investigations. I'm sure you guys have all heard of HIPAA and NIST and a lot of the other frameworks, but also some of the regulatory frameworks. We will defend you against a regulator showing up at your front door saying, we don't think you've been handling privacy correctly. And that includes the defense. And in a lot of states, we will also pay for the fines and the penalties. It's important to note that that is jurisdiction specific. So sometimes a judge is having a bad day and doesn't want the insurance to apply because he wants the fine to really hurt. In that case, I can't pay the fine, but that doesn't happen most of the time, thankfully. Another
Let me ask
component.
you a question about that, since we have some people on the attending the webinar that are obligated to the Department of Financial Services in the state of New York. If I heard you correctly, you're saying that if the department comes in and says, "Hey, you're not doing this right," certain policies will cover the defense of that. Is that what I heard you say?
That's right. So if the New York DFS shows up to your front door and says, "We have these standards, you have not met them, and we are going to fine you for not meeting those standards," we will defend against that. It's a very important card, especially considering the Office of Civil Rights, the OCR, which wraps up under Health and Human Services, but that's the federal agency that prosecutes HIPAA. And if anybody has ever stopped to read the fine print, fines can be upwards of $1.5 million a year for HIPAA violations. They are extraordinarily punishing. So we have definitely paid a few of those.
Okay.
Moving on to media liability, a lot of times because people have digitized their entire sales process and put a lot of their brochures and collateral online, you can be exposed to some of the materials, whether it be the wording or the actual images that you're presenting. So we will defend you against lawsuits arising out of that. So we've paid a few copyright claims. We've handled a lot of DMCA takedown notices, which is when someone says, "Hey, that's my picture, you're not allowed to have it. You have to take it down." We've defended a lot of that stuff too. Another big third-party coverage, PCI DSS assessment coverage. So if you do take credit cards, depending on how you have set up that payment arrangement, you are liable for any fraud that happens on those cards if it is discovered that your handling of the card is what caused it to get lost. So think Target, Home Depot, those are some big name brand breaches, but a lot of people take a small number. A lot of people will have under 10,000 transactions a year, but they'll still not be set up correctly with PCI. So we will pay those fines and expenses. Those are contractual. You owe them to the banks and the merchants and the card brands when something goes wrong. And then finally, breach management expenses. This is the actual payment to provide credit monitoring to people whose identities may have been exposed, credit restoration, and anything else that's legally mandated. So, in a lot of states, you're required to offer people 1 or 2 years, sometimes even 3 years of credit monitoring if their social security number was exposed or something like that. So those are the big third-party components to the insuring agreements. Any questions on that so far? Please go ahead and use the Q&A function. I'm also happy to go back. So the second half of the policy, and this is the half of the policy that we're actually, when I got into this business, we paid more claims on the third-party side and less on the first-party side. That's completely flipped now. So in the last, I would say 3 to 5 years, the whole thing has finally shifted so that we pay most of our claims now on first-party stuff. So this is really important stuff to understand about what's in your policy, because this is generally $1 that gets paid. Business interruption. If your business is taken down because of a ransomware attack or other similar malware, or credentials being stolen, and you've been locked out or something of that nature, we will pay for the lost income of your business. That includes a limited amount of overhead as well too, if you need to pay employees more than they usually did to try to restore data and that sort of thing. We also cover contingent business interruption. This is an extension of coverage that will cover you if one of your IT providers it fails. So a good example would be ADP, right? So they're a payroll processor. but they're considered an IT provider in our opinion because they provide an IT service, even though it's payroll. So if they go down and you can't make payroll, our policy actually will step in and pay. The next big one is digital asset destruction, data retrieval, and system restoration. So anyone who's been the victim of a ransomware attack knows one of the biggest challenges that you will have is actually restoring the data. So a lot of people say, I'm invincible against ransomware attacks because I've triplicated my backups and I've got a hot backup site and this other thing. If the ransomware has been on your system long enough, it will probably have replicated itself against all of your different backups, which means all of your backups need some level of forensic scrubbing before they actually can have the data restored. Something that we also pay for on our policies, in a lot of respects, the actual hard drive or piece of hardware may have had enough malware on it that people don't trust it anymore, and they don't even want to use it, even though it's been degaussed, wiped, rewritten and everything. So we will actually replace the hard drive and other materials in some respects. So the second one, or the third one down here, is system failure. There are times when your system fails and it doesn't necessarily happen because of an attack. There could be what we call a fat finger, like that's an administrative error. Another thing that could happen is if you have a power source that's under your control, i.e. it's not coming from the utility, we will actually pay if that power source fails. So those are a couple of things that we'll pay for as well. We don't pay a ton of these so far, but if you remember the Delta Airlines system failure, I think this was 2 years ago, maybe 3 years ago now, but that was a power source that was under their control. Social engineering and cybercrime coverage, we will actually pay for the funds that are stolen if you're the victim of a social engineering scheme. We will also pay for those funds if somebody thought they were paying you because a bad guy got onto your system and basically posed as you and asked for money from one of your customers. We'll also reimburse for that too. We pay a lot of claims on this side right now. Reputational loss coverage, we will also cover to restore your reputation, because obviously if you have a large enough breach, your reputation will get damaged as more and more news media prints and reprints the story about what has happened with you and your customer. So we'll actually replace income as it relates to your reputation in that regard. Cyber extortion and ransomware expenses. I've talked a lot about ransomware, but one important thing to note is we do pay the ransom. So we will actually pay the amount required to unencrypt your data. Right now, it is illegal to do that. The FBI doesn't want us to do it, but we have a tacit agreement where the government, where as long as we report to the government that we did it, they will not do anything. They will kindly look the other way. They just want to record how much money is being spent. So we can actually pay this. We have Bitcoin wallets. We have everything set up to do that. So I'm going to stop, take a break real quick. I think there's some chatter on the Q&A. Al, anything?
Let me ask actually a couple of questions. One, in terms of covering these first parties, are there elements of a policy that would, like on the exclusions as an example, that if you did things to mitigate the potential risk that limits, therefore, your liability to pay as an insurance company? So, for example, if someone falls victim to social engineering, okay, and you list that as something you pay, but the company never took steps to educate their team, elevate the awareness level of their company, does that lack of proactivity on the company get held against them relative to the insurance company's willingness to pay or limit their exposure in terms of paying?
It's a great question, and that gets to the heart of philosophically the difference between us and a lot of our competitors and how people do this business of insurance. There are a lot of insurance companies that don't care how good your systems are, your protocols, or your controls internally, they're just going to absolutely lace their entire policy with a bunch of exclusions so that if something does come up, they can point to that. There are other companies, and I work for one, and I've always worked for companies that do this. We underwrite to that stuff, which means we ask questions and we do our homework and find that information out front. So in other words, if I have a customer or an applicant and I don't like what they have going on internally with their management controls, then I just decline the business. I won't put out a quote. I'm not going to put out terms that will later get them, with get you terms or anything like that. I'm not interested in doing that. I don't have risk management exclusions in my policy or anything like that. So it's a decision we make up front based on what we see. I think it's also important.
So if I'm hearing you,
go ahead.
I'm sorry, go ahead. No, go. And I'll ask at the end.
It's also important to note, if you do have a claim, post-claim, a really good way for an underwriter to non-renew your policy is after the claim, you come back and you say, well, we're not going to change anything. One thing that we really want to see in the underwriting community is after there has been a claim, are there behaviors, protocols, and controls that you are going to put in place and adopt? Two really big ones right now that we're asking for after a claim. Make sure your employees get on a regular training schedule about phishing and social engineering, and please start using two-factor authentication, especially for all accounting employees. And we'll get into that further down in the presentation.
So then what you're saying is that every insurance company is different to some degree, and to be paying attention to those exclusions that might otherwise be beneficial to the insurance company so as to not pay. So for instance, if they have an exclusion that says you don't do training, and if you don't do it, we don't pay, you need to pay attention to those exclusions.
That's right. And that's one of the key things about having a good insurance agent, because a solid insurance agent goes through and identifies those things and points them out. A very normal, typical conversation to have right now when buying cyber insurance is, hey, I have this insurance market. They're super cheap. The policy form is not that great, but it's cheap. Or I have somebody that's a little more expensive and the policy is a little less restrictive in some regards. It's your choice as a buyer, but I recommend, this. So a good insurance agent has a conversation with you like that.
So talking for a moment about, you said earlier that you look to see, you do a whole bunch of upfront due diligence through your vetting process. And I'm assuming, therefore, all of that vetting goes into how you price your premiums. Is that correct? Can you talk about some of the elements that make up the elements that make up your premium pricing, if you
Sure. So for us as an InsurTech, one thing that we do differently is our scan and the score that we give to an insured actually is a pretty critical component in how things are priced out. That scan is looking for things like open ports and secure HTTPS headers. We use a lot of email authentication. We can scan for that. So however that score comes back and renders is kind of the basis. And then the next thing we look at is revenue. Revenue is a big driving component because that allows us to see how much money they have coming in and going out the door. That is important because in a business interruption claim, that becomes the flow. That becomes kind of how we model the exposure. Other things we're going to look for, employee training, two-factor authentication, obviously firewall, antivirus, updated patching schedules. We want to know about backups. How frequently are they segregated? Are they encrypted? If you're dealing with very sensitive information, we do ask for encryption controls, whether that be in transit, at rest, on mobile devices, and do you even allow data to appear on mobile devices? If you have BYOD, are you using a containerized solution for the people that have email on their own personal devices? That sort of thing.
Do you have some sort of, I'm just sort of thinking downstream before anybody asks this question or ask the question after this is over. And we do record this just so that you know, and I think I mentioned that to you before, Peter. But so everybody knows, we record this, we put it up on the site, and we have gotten people ask questions from recorded videos. So for the sake of having an answer to a question that has yet to be answered, So you talked a little bit about the things that you look for relative to pricing. Do you have some sort of cheat sheet or a crib sheet that we can potentially give out to either the attendees or people later on that says, hey, if these are some of the things you need to be put in place if you want, and let's call it preferred premium?
Yeah, so we typically typically as an insurance company, we don't put out best practices because we have to be careful not to change our role from basically a financial securitizer for them to being a risk manager. The job of the broker is to be the risk manager, but we regularly share lots of this information with our brokers who then can share it with these customers. So yeah, in other words,
So
yes, it doesn't
ask your
come
broker is
directly
the
from
question.
me, but yep, exactly. Yep.
Okay. All right, good. That's good. That's good information. And then before we leave here, you said you pay out ransomware. One of the questions, what is the average claim amount for a ransomware claim?
So 2 years ago, I would have said maybe $2,000 to $5,000. It is now up to $25,000 to $40,000 in that range, depending on the size. But that doesn't tell the whole story. The ransom, that's on a rolling average. So a lot of these prior low ransoms are drawing that number down. Most, if not all of our ransoms are 5 to 6 figures now. So we have at a previous company I worked for, probably, I don't know, about two or 3 months before I moved down to DC and resigned, I think we sent a $1.2 million wire in Bitcoin. So they're not small anymore. And one of the most insidious things that we're finding is that hackers will actually sit on your network and try to find your insurance policy and then find the limit on the insurance policy, like the declarations page that we were talking about. And then when you say, I can't pay, I don't have any money, they email you the declarations page and they go, oh yeah, you have insurance, you can pay. So
yeah, I have to appreciate somebody who is very good at their craft, even if it's witchcraft. You got to appreciate
that's right,
somebody who's good at their craft. And sort of underscore that. So, we recently did a cleanup of a ransomware attack for somebody. Our fees alone approached $100,000. And that was before they paid the forensic team, the legal team. So that was a substantial payout. It was better than $300,000 all in on the payout from the insurance company. So they do get up there quick. And I think you're right. There's a lot of low ransomware claims that drive that average down, but for a business of any consequence, and that doesn't mean they have to be a very large business. If they're throwing off even a few $100,000, $1 million a year or better, that's a very low number. I think on average that's much higher. We've done several of them, and I know that just our fees alone approach 6 figures.
Yeah, and I think this is the reason why, and I don't mean for this to be a hysterical sort of statistic, but it's a true statistic. 60% of small businesses, after they've had an uninsured ransom attack, just go out of business. They have no assets anymore. It literally, like I said, it can kill your business faster than this virus can. So that's why now it's more important than ever to have insurance in place for this, because at least you can defray, well, in most cases now, the vast majority of these costs onto the insurance company. So
Okay.
Just keeping with time, gonna keep moving on here. So everybody's been virtualized. It's good. I'm glad. I think the CDC's right. I believe in science. This is fine. But there are a ton of new exposures that we didn't necessarily consider. Now, it's important to note, I have nothing in my policy that excludes these exposures. I pick up everything. And it's an important note to make. So even though your entire workforce is now at home, my policy is still as good as if everybody's in their seat at your office. It doesn't change anything. But there's a lot of things to consider. Outdated hardware. So for a lot of these companies, they don't actually have the money to pay for brand new laptops for all of these people to work from home. So in some cases, people are using older infrastructure. That means, who knows if they've dusted off the old, Dell 100 in the basement or something, but in addition to functionality issues and just, interfacing with older OSs, you've got security exposures to consider there too. So how you deploy the software, whether it be locally or whether you have them going through a VPN or something like that, can become a new consideration. I have this problem with lawyers and doctors and some other professional services, but people are now bringing physical files home. So they're taking a chunk of customer files. Now, why they're still using paper files, I don't know. I used to work for an insurance agency. They still use paper files too. It's just some habits are hard to break. I get it. But a lot of people are putting these in bankers boxes and now bringing them home. One of the worst claims that I had was actually somebody who got into a car accident. It was a doctor, and an entire banker's box full of patient files just went flying out on the highway. We actually had to pay for that. Something to consider. Remote users stressing infrastructure. A good MSP is obviously going to work ahead to try to make sure that there are no bandwidth issues for you, but we've seen this quite a bit. There's nothing I can do to make up for like a Spectrum or Xfinity or one of those big ISPs from getting stressed. But you can definitely work with your local providers to make sure that as people log back into whatever servers or cloud infrastructure you have, there are enough seats for everybody. Another thing we've been seeing, Zoom bombing. Zoom didn't have a very good password infrastructure. In fact, they, for a long time, basically you could, if you got a Zoom URL, you could just change the digits and basically drop into anybody else's meeting who didn't have any robust credentials built up around that meeting. So what people were doing is hackers were like jumping into meetings and then taking over the screen share and playing like, awful pornography for a while. It was called Zoom bombing. And Zoom is doing everything they can to address these issues, but it's worth doing some research on whatever virtualized meeting provider you're using. Everybody's got, Google's got Hangouts, Microsoft has Teams, but it's worth looking at how you've established the access controls there. So obviously with Zoom, they have been deploying passwords more. My understanding is that is marginally successful. They still have more work to do too. So.
There's no such thing as perfect security. Zoom is not dissimilar to anybody else that's out there. Anybody who tells you that they're more secure is just not an accurate statement. All of these companies that facilitate what we're doing right now, right? These webinars and these virtual meetings and all, they have exploded as a result of COVID-19. All of them were ill-prepared for the absurdly expansive growth that they underwent in a very short period of time, and every single platform is stressed. And I don't care who they are, or whether it's Teams or GoToMeeting or Zoom. Zoom just happens to be in the headlines today, and they're in the headlines because they happen to be the most popular, and also because now the federal government has come down on them for some of this. But every single one of the platforms are guilty as charged, Your Honor. Yeah, and Zoom is, like a lot of these platforms, Zoom is now worth most U.S. airlines in market capitalization alone. So their importance has overnight just skyrocketed. So it's important to note that it's going to take them time to fix everything too. Nobody was expecting this to happen. Right. Don't mean to imply any malfeasance on the part of Zoom. It's just, they're in the headlines. And I mean, they should be called out. They're in the headlines. But the point is for everybody on the call, everybody's guilty of it. And we have an obligation, at least on the IT services side of our lives, to go out there and at least educate our clients and customers. You guys as well on the insurance side have an obligation to do that as well for the things that you're responsible for. So we have an obligation to let people know there's no such thing as perfect security. We can do the best we can, and the best we can is educate and keep people up to date, because the front line of defense are the people who are using it. Yep, 100%. And honestly, the biggest weapon that we have is not software at all. It's training.
your company's cybersecurity is only as strong as your most ignorant employee. So think of your most ignorant
That's
employee.
true.
That is your firewall. And so the best thing you can do is just continue to educate. So more on that to come. Another issue, a lot of small businesses, if they are not insured, they're just not paying the ransom, and they're trying to basically move forward with no data because they're trying to preserve capital. So that's an uninsured risk that we've been seeing a lot of right now, which is tough because if you're, say, a small accounting firm, you legally have to retain whatever the IRS mandated 7 or 10 years of these tax returns for your customers. So also, how are you supposed to file the tax returns for your customers for 2019 if you lost what the 2018 taxes looked like? So that's a lot of issues there. Crime claims are up. So a lot of people are using this as an opportunity to socially engineer people. What they're doing is they're saying, hey, we're a vendor of yours. We're going to go out of business unless you pay us. Oh my God. Yeah, they're using a lot of like panic language. And so people are falling for that. Again, it's really important to have multi-factor authentication for accounting employees, but also have callback procedures. So if you sent a wire somewhere, make sure you have a number for the person at the other end of that wire to call and say, did you actually receive it? Are you a real person? That sort of thing, and verify it. Other things to consider, online sales volumes are up. If you are an e-tailer and you have, you vend a lot of your product online, make sure that you can handle the capacity. I've also just had a claim where the people operated a donation site and somebody hacked into the site and tried 80,000 small transactions in a blitz attempt to try to steal a certain amount of money. It was similar to like a GoFundMe. It wasn't the same thing, but there's just a ton of malfeasance right now in the space.
I would say with people, and I'm wondering if you would agree with this, that because people are working from home and they tend to be in an environment where they feel safer, right? They're home, they feel safer at home, that their tolerance level is significantly higher, meaning that their exposure level is higher. So because they're in a more trusting environment, they're more likely to be lax relative to following company policy and procedure, or more lax on opening an email, and because now they're in the comfort of their home. Would you agree with that?
Yeah, it's a moral hazard element, and it's one that is very hard for us to underwrite to, because there's this insidious calculation for many years with CISOs, which is, okay, do I spend X number of dollars on security, or do I just spend X number of dollars on insurance, and then if something goes wrong, I can just unload it onto the insurance? The problem with doing that is you don't know what the attack vector is going to be and for how long it's going to be. So needing that money up front right away, the insurance is going to pay, but I guess what I'm saying is it's going to be a lot less of a headache just to make sure that you have the right security controls in place, because you're going to get premium savings from us for being in a better position. If you have lax control.
I think you said.
Go ahead.
I think what you said earlier is even more important. The reality is, if the insurance will pay, but they're not going to pay if you go out of business.
Right.
And if 60% of, and you said, I'm using your stat now, 60% of successful attacks lead people to go out of business, meaning 60% of those victims go out of business. Insurance isn't going to cover your revenue in perpetuity.
Right.
They'll pay for any kind of recovery, and then beyond that, if you're out of business, you lost your livelihood. So if a CISO is making that kind of a calculation, fire them, frankly.
Yeah. And that's, and I'm hearing a lot less of that also because, 5 years ago, CISO was like a luxury. People were like, I don't want to have to hire a CISO. This is, an expensive individual on my team that's going to, I don't know what they're going to do. Now the CISO is at every single board meeting, sits right next to the COO, and is a hugely core critical component. So I think your observation's correct. We're seeing a lot less of that now. We're seeing people take this a lot more seriously, thankfully.
Good.
So you bought the insurance. Let's talk about some of the relevant policy provisions and how they trigger right now for your work at home situations. One provision that a lot of policies have, and we can include it on ours, is called voluntary shutdown. So sometimes you can have a ransomware attack, but your systems are still functional to a certain extent. However, if you decide to shut your systems down because it's going to be faster to remediate all the malware from the systems, we will allow you to do that and then start paying that business income. So there are still a lot of policies out there that say, nope, you have to be fully shut down or else we're only going to give you a partial payment or that sort of thing. So that's an important provision to consider. Having system failure as a provision at all is important. So there's a lot of markets that still don't want to cover a unqualified failure of your system if it's not software related. Obviously it's a grant that we have. It's important to make sure you have that. You also want to make sure that you're attack vector agnostic, which is the policy doesn't care whether the person was working from home or working in their office. It will trigger still if there's an attack. Again, that's how we write our policies. I think that is how policies should be written in general. Bricking that I mentioned that coverage before, that pays to restore the devices if you don't trust the actual hard drives anymore. And then look in your policy, there's going to be some older exclusions in there. Unencrypted devices. So sometimes if you answered yes or no based on the encryption of devices, insurance companies would put an unencrypted device exclusion on the policy to try to prevent having to pay for like a lost iPhone or laptop that wasn't encrypted that may have had sensitive data on it. Another thing is some of these policies might not cover you if you don't actually own your own infrastructure. So you don't own your own servers or machines. This is important because a lot of these policies need to be amended or fixed so that they cover cloud infrastructure, which is where everybody's migrating to right now anyway. So, and that's something we cover as well. So kind of some landmines to look for when you're talking about your own insurance. And then I think this is my last slide, and we'll continue on with the Q&A, but here are some tips, things to consider right now about your organization and just cyber hygiene. Some of them are intuitive, some of them are non-intuitive, but I think they're all pretty cheap and easy to implement. So we recommend that people start unsubscribing from mailing lists that are not relevant. So if you get 5 or 6 emails a day from different clothing retailers or something like that and are not relevant to your business, maybe consider unsubscribing from them. The goal of this is to cut down on traffic so there's less of a phishing exposure. So a lot of these emails, a lot of people get used to this high flow of junk mail coming in, and then they may not be able to actually catch when there's a legitimate email coming through. Consider using call screening apps for mobile devices. So there's a lot of these commercially available on the App Store right now, but these will tell you when there's a high spam risk coming through. Some native operating systems for phones have already integrated these, but if you don't have one, consider that. Another big one, and we've done it here, is consider using a password manager. So instead of opening up a spreadsheet or a notes file that you have, which has all your usernames and passwords on it, actually use a piece of software that properly encrypts and vaults these passwords. And then you only need one password to use it. So good examples, we use 1Password at Corvus. I've used Dashlane in the past. I really like that one. I don't know if you guys on your side have any managers you guys recommend.
We like Dashlane. We like LastPass is another good one as well. Bitwarden is a very good one. That's open source. Obviously we're IT, so we can deploy all of those pretty quickly. But those are all very good. Most of them that are out there are very good. And we didn't used to recommend them several years ago. A few of them had fallen victim. They've significantly increased their security posture. And in general, all of them are very good.
Yep. Yeah. So, and they also have the ability to generate very complex passwords for you too,
Yes.
which will add an additional layer of security. This next one, I can't stress it enough. It's a big, big deal. Use multi-factor authentication. For anybody that's not familiar, that's when you add a layer of security so that instead of just a username and password to access systems, you also need to generate a token. That token can be generated on a phone, on a separate website. But either way, it requires a second method of authenticating your identity before you can get in. So I have this enabled for yeah, go ahead.
2FA and MFA, the same thing. They are absolutely essential if you're going to be connecting to anything that isn't on your desktop, so to speak. And so then there, for everybody who doesn't know, it connects to some sort that is yours only. So it's a second layer of protection. You log in, and then 2FA will pop up on your phone so that somebody else hacking your password, if they don't have your phone, they can't get in because they won't pass that second layer of protection because it came in by your phone. What happened with, for those who may or may not know, there was a remote control app that got hacked a few, I think, I was going to say a few months ago, but I think it was mid last year. And they got hacked and they claimed to have two-factor authentication, but all they did was have a second password. And because it wasn't tethered to an individual logging in like your cell phone is, they brute forced their way through the second password. And when they brute forced their way in, they got in, they took control. It was actually an MSP who had gotten hacked. Their screen, their remote control package had gotten hacked. As a result of that, all of their clients got hacked. And
Yep.
So it's absolutely imperative. You know, we make sure we use it on everything we do. I'm sure many of this call are doing the same thing, but I could not agree more. That is of all of this stuff, beyond the training and some other things you talked about, technologically, this is perhaps the most significant thing.
Yeah. And those are, you know, when we talk about underwriting on our side and doing our due diligence, I mean, those are two really critical questions, especially surrounding cybercrime and social engineering that we've been asking about: training and multi-factor authentication. So those are gospel for us. Another thing, enforce patching and antivirus and firewall settings globally. What I didn't write, I should have written here just to be more specific. You really should have a device management software in place so that all of the remote devices that your employees are using, you can change their settings globally. We're in a Mac environment here. It's taken some getting used to. I'm actually a native PC person myself, but we installed one called Sentinel, I think is what it does. But basically they can push new security settings down to my device and I have to accept them. So it's one way to manage all your devices. Consider using VPNs, depending on the type you're using. There are people that may complain about performance issues, but VPNs are still a really, really great way to encrypt your traffic and keep it more secure. And then make sure you're using an email security layer. I think we decided on Mimecast here. Do you guys have recommendations or thoughts on which ones you usually use?
So we use Mail Protector, there's Cipher, there's several that are out there, and I know there are people on here that have their own preferences. But and when you talk about security layer, for those lay people on the call, those are generally spam and virus filtering for your email, and a way of doing that. Additional security includes email encryption. So we want to make sure that you've got email encryption turned on, so when you're sending personal information, private information, confidential information, that's encrypted. Much like a VPN, a virtual private network, that communication encrypted cannot be read by prying eyes. So only the recipient would be able to open it and read it.
Yeah, and an additional thing that I like, what our system does is it actually obfuscates links. So if you want to open it, you have to open it into a containerized environment.
Right.
So it's good software. I think it's worth every penny you spend on it.
Agreed.
So that's the body of the content. We've got 10 minutes left. Is that right?
We have 10 minutes, but we've got there. I don't know if anybody has any extra questions. I interjected. I warned you I would along the way and asked the questions that had come up. So I don't know if anybody has any additional questions. Certainly put them there for the next few moments. Otherwise, you'll be sitting here in silence, and we don't want to do that. So just to sort of recap, if you would, or let me recap, and certainly disabuse me if I'm mistaken. Some of the things that you look at well, not some of the things, the big things you look at relative to pricing. Again, you don't sell retail, so your agents and brokers would be who represent your products would be getting those numbers and passing them along to whoever their clients were. But you're looking at the security posture of the organization, both technologically, whether they have firewalls and whether they have, as you said, secure headers and things like that, all the way down to the training and the policies and procedures. Is that correct?
Correct. Yeah. And again, the revenue being a big driver just based on kind of what your premium is going to come out to be, because micro businesses versus small businesses versus, mid-market businesses obviously get priced quite differently.
So a question did come up. Someone on this call has asked if we talked a little bit ago about this managed service provider whose remote control package had gotten hacked, and then their clients in turn get ransomware. How does insurance deal with something like that? If a third party risk, and anybody who's on this call that's heard me speak before knows that the two biggest things that I see, the biggest risks out there for everybody, are third party risk and Internet of Things. Internet of Things, we've done webinars on that before. We're going to do some. I have a webinar, Internet of Thing manufacturer that we're speaking to about having them as a guest on one of these calls. But third parties get exposed, and that exposure cascades all the way down to the client. What are the coverages at the various layers? How is the client protected if you're insuring them? How is the managed service provider or the third party, if you would, that got exposed? How are you protecting their clients if they're the ones who has insurance?
Sure. Yeah. So there's a lot of complexity here. I'll break it down to simply, if you're an MSP, you should be requiring your customers to buy cyber liability. If you don't require your customers to buy cyber liability, you all of a sudden are now the insurance company. In other words, you are going to somehow legally be found responsible for everything that happens to that customer. Bearing in mind that the customer may also have been the vector for the attack as well, and may have gone upstream to the MSP. We've seen that happen before as well too. So the first line of defense is if your customer is suffering, as an MSP, your customer is suffering a cyber attack and they have cyber insurance, that cyber insurance should respond, whether it's your fault as the MSP or not. If it's your fault as the MSP, that insurance company may pay that claim up front, but then they may come to you as the MSP and say you're at fault in a later proceeding called subrogation and try to seek some recovery that way. That doesn't happen super often, but I would guess that it may happen. It'll happen with more frequency as these MSP attacks become more commonplace. It's important to note that MSPs carry their own insurance. So in addition to cyber insurance, they carry a component called technology professional liability. Technology, or tech E&O is another phrase that we use for it. That covers you for financial damage that you've caused third parties because of your own negligence. So as an MSP, if something's not right with your security configuration and there was a ransomware attack that then went downstream to your customers, those customers are going to start bringing claims against you. That's what's going to respond. It's important to note though, as an MSP, when a lot of MSPs buy this insurance, they buy it thinking they're going to just protect themselves and they're not going to have to protect all of their customers. So they don't tend to buy a lot of limit or enough limit. And so you'd be surprised. I've had a few MSPs that had upwards of maybe 80 commercial clients that were all small businesses, and they bought only a $5 million limit for themselves. The $5 million was gone within a few weeks. And then the MSP was totally uninsured and naked for the rest of the proceedings going forward. So Buy enough limit, consider that, but also consider the contractual provisions that you put in place. In the world of technology, there's no established duty of care. You're not like a doctor or a lawyer where there's been hundreds of years of case law, which has established what's right and wrong for you to do in your profession. So what a lot of times happens is the contract becomes super important. Whatever you agreed to with that customer, whether you agreed to service credits, whether you agreed to actual like cash or to pay total fees back to them or something like that, that becomes critical for the tech E&O claim. So having good hygiene around how you construct your contracts as an MSP is also critical.
Okay. And would you then recommend, so let me ask two questions. You said, you know, that 5 million wasn't enough on an upper limit for this particular MSP you talked about with some 80 commercial clients. And I realize that I'm going to ask you a question that's almost impossible to answer, but I'm still going to ask you to answer it. What on a per client basis, what would the limit be that you would recommend? Is it $1 million per client? Is it a half? And I realize that so many factors go into this. So I realize it's almost impossible to answer, but what would you say on average should be the reasonable limit on a per client basis? Because some MSPs have 15, 20 clients and some MSPs have 150 clients.
Yeah, so very hard to benchmark, but I'll say this. When I was a retail insurance agent, what I used to tell people is all your contracts probably have a limitation of liability clause for total of fees paid, okay? So add up all the fees paid from all of your customers over the life of those contracts, and that should probably be how much limit you want to carry. So for a lot of smaller MSPs, that might be $5 million. That might be $10 million or something like that. For a lot of mid-sized MSPs, that number could go, you know, upwards of 20 million. There is a point of diminishing returns when it's hard to get enough limit though too. So you have to work with an insurance agent to find what is going to be an appropriate limit. So if you buy $10 million and it costs $60,000, and the next 10 million, because the market is hardening up a little bit in this space, is still $60,000, do you want to spend, you know, straight 100% rate online to get that next chunk? Or do you say, okay, maybe I'll buy 5 or a little less or something like that? So you'll work with your agent to find the right amount, but generally I've always looked at your contractual exposure equaling what limit you should buy.
Okay. All right, we only have a few minutes left. Anybody else out there? Please feel free to ask. Peter, I really do want to thank you for the time. I think it was extraordinarily valuable. A lot of good questions came out. A lot of great information came out of this as well. For everybody on here, we are recording this and we will be posting that by end of business tomorrow. Next week, next Thursday, we have an employment lawyer coming on to talk about what you need to be doing relative to your work at home employees, how you need to be addressing the fact that they are working from home, adding some layers of policy and procedure. Peter talked about this before. They look at policies and procedures and how you manage your team when they're pricing risk. The employment lawyer is going to talk about that same thing, but what are your legal obligations with them working from home? What are your legal exposures relative to them working from home? So I encourage everybody to show up next week and listen to what he has to say. Chris is a great guy. They're a national law firm on employment law as well. So come with your questions. Nobody has heard any questions. So Peter, again, I want to thank you for doing this. We'll be making this deck available as well. Is that correct, Peter?
Yep.
All right. Awesome. Thanks, everybody. Thanks again, Peter.
Thanks, folks. Appreciate it.
All right. Have a great day.